You've heard it, the South African Reserve Bank revising upwards its inflation expectations for this year. Rising energy, food and fuel prices have put increased pressure on the economy, and according to the bank, will likely lead to inflation peaking at higher end of the Reserve Bank target range of inflation of between 3% and 6%. We're joined now to talk more about these inflationary pressures by Thalia Petousis, who is a portfolio manager with Allan Gray Investments. Thank you very much, Thalia, for joining us. Let's start here. When it comes to the inflation being this buzzword, why is South Africa's inflation lagging with the rest of the world? And what is happening when it comes to those global markets when you look at what the Reserve Bank MPC has actually decided today?
Right, yeah. So, I mean, this has been a very topical question. I think a lot of people have sort of asked, you know, is Stats SA recording our inflation numbers correctly? The way that I think about it is, you know, there's only been a handful or so of times in the last 40 years that South Africa's inflation has lagged that of developed markets or that of the US, you know, and now is one of those times. And the reason for me, you know, if you pick apart the inflation basket, obviously we have food and fuel, which is set at import-export parity. You know, we don't necessarily have control over those levels. But where the South African consumer, you know, comes into the inflation sort of headline reading is via core inflation, via consumer demand, so stripping out those food and fuel components. And that's where we're really lagging the rest of the world. So to me, that points to a weakened consumer here in South Africa versus offshore. And really, if you think about what's been taking place since 2020, since the COVID-19 pandemic, you know, offshore and particularly in the US, there was this phenomenal stimulus in the markets. And, you know, in fact, you know, the US sort of handed stimulus checks out directly to consumers. They also expanded their balance sheets. They bought up debt in the markets. You know, they embarked on these sort of trillion-dollar grand spending programs. Whereas here in South Africa, we didn't have that sort of fiscal headroom with which to support consumers. I mean, we did see that 350 Rand per month social relief distress grant going out. But, I mean, if you take that as sort of a top-line level, you know, that's only a spend of about 40 billion Rand over the space of 12 months, which is about 1% of GDP. So we just couldn't support the consumer to the degree that sort of our offshore counterparts did. And for that reason, I think it's that consumer spending and demand that has been far more muted here, and that has resulted in prices lagging to some degree.
Let's talk, Thalia, about what many South African consumers are actually wondering right now about this powerful force that food inflation is. We are paying way more for food, and the end is not in sight in terms of that particular expectation. What do we need to understand about food inflation and looking at what has happened in the past, because we've been here before?
But we have been here before. I will say, sort of, if you look globally, but because that's where, you know, the elevated food and fuel prices are almost emanating from. I mean, the last time that globally, you know, food prices were as high as they are now, or rising as fast as they are now, was probably in the 1970s and 1980s, when sort of U.S. consumer price inflation was north of 8%, you know, where we are now. And in fact, you know, rose to sort of dramatic levels. I mean, it got up to sort of 20% year on year. Yeah, and the dynamics at play, I mean, a lot of people will point to, you know, the Russia-Ukraine war and, you know, the issues in the global supply chain that have emanated since then. In fact, you know, these inflationary pressures have been building for a long time. In sort of the 12 months to March 2021, we already saw a rise in sort of corn prices, which is a very important global crop, by about 40% year on year. And then in the 12 months to March 2022, we saw a rise of about another 30% year on year. So these pressures have been building for some time. I mean, some of it was post-COVID demand, was, very tight supply chains during COVID. The fact that global trade kind of fell to its knees. Ships weren't taking off out of harbor. There were these long delays in shipping queues, around the world. So some of it was that post-pandemic demand, but I'll also say it was this phenomenal monetary stimulus that came out of the Fed. All of this money printing, as I said, pushing checks into the hand of consumers that really drove up prices. So there have been a few factors at play. I won't say it's just Russia-Ukraine, but that has definitely been the catalyst for the recent sort of rise of an already elevated base that we were in.
Thalia, we've heard from Goldman Sachs actually saying in the U.S. they are expecting the country to go into a recession. And when we come back here in South Africa, we've heard today, of course, the MPC with that 50 basis points when it comes to the interest rate. Where to, according to Allan Gray, from here, where do you expect U.S. and South African interest rates to go?
Yeah. I mean, the U.S. will definitely need to raise rates much further. I mentioned the last time that inflation was as high as it is today in the U.S. was in the period of 1970s and 1980s. At that time, the U.S. interest rate was north of 15%. Today we sit and it's sort of just hovering below 1%. So I'm not saying it's going to correct all the way there. That would be a very bold move. But certainly rates need to rise. Currently, the forward rate market is pricing for U.S. interest rates, the overnight rates, to reach 3% by the beginning of next year. And our forward rate market is pricing for the South African repo rate to reach 6%. That would sort of be by the end of 2022. So, that implies kind of 125 basis points left of rate hikes. And that's much more aggressive than what the SARB's quarterly projection model is showing. They're sort of showing us ending the year at about 5.3%, which implies another 50 basis points of rate hikes. So there's this disconnect, and there's been this disconnect for a while versus what the market is pricing and versus what the SARB's quarterly projection model is sort of putting out there. And I think ultimately the biggest swing factor in terms of where we land will be the trajectory of food and fuel prices. And I will say that right now, there are no immediate signs that those pressures are abating.
Governor Lesetja did mention, Thalia, that when it comes to bond yields, some of the bonds have actually ratcheted up when you look at in the previous few months. What is the impact of this decision on the South African bond market?
Yeah. So definitely they've ratcheted up. As the U.S. has started to raise rates and normalize their interest rates, there's been spillover into our markets. So naturally, capital markets in the U.S. have been tighter. Foreigners have been less likely to extend funding offshore. And I feel, any emerging market or developed market who isn't going to follow that path of interest rates higher will see some sort of negative sentiment towards their foreign exchange and towards their bonds. And already, we've seen this. In the last year, sort of, if you look at kind of the G10 sort of developed market currencies against the dollar, they've weakened. They've weakened quite substantially, I think by, as much as sort of 10 to 15% in the last year. And the rand certainly has also followed suit. So there is a risk in falling behind. And again, with that sort of those capital flows being redirected, redeployed perhaps to the US bond market where interest rates are rising, it means there's less cash sort of that will flow here to South Africa. And we've seen that, in the rise in our bond yields in the last few months to north of 11%. So, in the immediate aftermath of the governor raising rates today, we did see a small decline in South African bond yields. They declined by about 12 basis points, so it's not much, but still. And then the rand strengthened from about 16.08 down to about 15.79. So in my mind, this interest rate hike is a bit of a credibility hike. It's the SARB saying, we will not fall behind. We will work to protect the value of the rand, and they will live true to their mandate. That's actually a direct quote from Lesetja. He said, we will live true to their mandate, to our mandate, and we will protect the incomes of the South African working class. But I think also, the SARB is very well aware of these FX differentials, of these interest rate differentials, and of the fact that they must follow the move that is taking place offshore to encourage capital flows into our market.
Certainly one of the things that have been positive today when it comes to the reaction of the rand. But on this one, the governor mentioned three things that are concerning to him that has gotten South Africa where it is today. That is load shedding, number one, the floods in KZN, number two. And then he spoke about policy constraints. What do you understand about policy constraints? From my point of view, he is actually throwing the ball back into the court of government.
Definitely. He's essentially saying monetary policy can only do so much. I mean, the level of interest rates, it's good and well, and it has a place. It has a place for perhaps controlling inflation, but it cannot fix the economy. Fiscal policy, infrastructure spending programs, that's what's needed right now to rebuild SA. So I agree with you. He sort of threw the ball back into that court and said, there's only so much he can do. The interest rate at the end of the day is a bit of a blunt instrument in terms of encouraging economic growth. Yeah.
Thalia Petousis at Allan Gray, portfolio manager at Allan Gray. Thank you very much for your time. Well, there's something good there when it comes to, Stephen, this issue of the rand strengthening below the 16 rand mark immediately after. Obviously, investors are looking at this quite positively, and it's a credibility issue, as Thalia says there, that you know how conservative the Reserve Bank MPC is, and it's something that is quite important.